It's April 30th, 2014. Current time is 18:20 GMT. Jay Misley here with the Forex Trading Outlook. This is for Thursday, May 1st. I'm doing a little bit early today due to personal reasons. I won't be around in the morning to do the video. So I think it's a good time to kind of digest what happened today and look ahead. Look, any way you look at it, the pattern should not surprise those who have been trying to push the euro down all year. This is 4 months and it's up at this reading point 6%. That's like just over 0.5% on the year to date. Just another one of those false moves to the dollar followed by a move up. The star was sterling cable, which broke out to the upside to a 4+ year high, hit 169. That followed 8 days trading around 168. And those who follow me know that when I see a pattern like that, it's a setup for eventually for a directional move, and sterling took advantage of it. So here we are going into Thursday, which is a partial holiday, a holiday in several centers, and then we have non-farm payroll on Friday. So if you think about it logically, who wants to be short dollars going into non-farm payroll? There's a risk that it could pop to the upside and exceed expectations. Let's say we had a 300,000 non-farm payroll. What would that do to the market? So I think we're going to have defense going into Friday. Then we see what happens. Then we have the ECB meeting and the Bank of England meeting the following week, and the ECB meeting will get the most interest. So let's just take a look at charts just to give us a clue. In the daily chart for the euro, we this 200-day moving average is the one probably that is the most supportive as long as it's intact. You got to consider some risk on the upside, although everybody, including myself, think that 140 would be very difficult. Of the immediate thing, we had 3 days in a row where we traded just under 138.80. That's 3 days in a row. It has slightly lower high today in what was not an outside day, but certainly we made that bounce off of 137.70 after EZ inflation. So it's obvious level. Everybody's going to look at the same level, 138.75 to 80 on the top, blocks 139.05 and 139.67. Those are your levels. There's very little on the downside until you get down to 137.70 or so. So you got to say that 138.50 is going to be very pivotal. It's going to set the tone. Another thing to watch that we've closed on the big figure 138.15 out of 16 days. The exception being April 21st when it closed at 137.93. So you got to watch the closing rate. You're going to have to start closing below 138 and stay there to encourage the bear side again, who once again got their knuckles burnt. So if you survived on Wednesday, came out with a few bucks in your pocket, didn't get hurt too badly, you're in actually good shape because we have enough room up here that we're going to have some movement. We're not going to stay 138.50 to figure for long. We're not going to stay 138 figure to 50 for long. This thing has gone on too long, but it looks like we're going to extend in this range for a while longer. Now, if you look at a 4-hour chart, and they're all going to show the same thing, you got all these highs here around that 75 to 80 level. Those are the levels that you have to watch because there could be some stops. But I said 139 plus should be difficult into the FOMC meeting on Friday. You got some data coming out tonight, Australian PMI. You got China data. You have U.S. ISM PMI weekly. Jobless claims, and probably most important, Yellen speaking. I'm not sure what his topic's going to be. So just expect tomorrow to be a chop because it's a thin session with U.S. Canada, I think, in London leading the ones that are open. And as I said, I would be surprised to see euro dollar over 139 into non-farm payroll. So if it goes up there, it probably offers up an opportunity to sell. Otherwise, 138.50 is going to set its tone well within 138 to 139. Now, if you look at the bottom of this chart here, we have our monthly newsletter, which is published today on May 1st. Actually, tomorrow on May 1st. The headline story is, "Come on, ECB, send us a signal." It tells you what is needed for the euro to go lower and break out of this range, which has been trapped for the last 4 months. I suggest clicking on this link. It's embedded in the video, and reading the article. It's a newsletter. It's really worth reading. So that's it. Good luck through trading. Just stay defensive. Stop somewhat closer to the upside than the downside. So I guess that's where your risks are. But as I said, 139 plus, if it's seen, should be tough to sustain going to non-farm payroll on Friday.